JJ, thank you for the invite. I've been on several of the calls this year. I recognize several of the faces, and I do appreciate Bob giving me the referral and the opportunity to be part of this group. I know when we first talked back in February, you had grown the group from about 600 or 700 to over 2,000. So first, thank you for the opportunity to speak tonight. Secondly, I would like to thank all those that have tuned in. This is an insurance talk, right? I mean, so you might want to go grab a drink real quick, and it needs to be stronger than water for sure to get you through the next few minutes. But all joking aside, I've been in the industry for 27 years, insurance industry, and I've always worked with contractors. And about 10 years ago is when I started focusing more on new home builders and new construction. I didn't have much interest in the area because I felt like because so many different companies offer the insurance, the coverage must be good. The understanding of the coverages needed for the builders must be pretty good. And within 6 to 7 months of me diving into that arena, I was shocked at how badly the coverage was written for most home builders. And I'm talking nationwide. I'm actually based out of Charlotte, North Carolina, but I have 375 clients in 42 states. So I'm all over the country. I'm licensed in 48 states and started building my home builder book of business really probably from 2012 on. 2010 was still pretty close when the crash and things were kind of getting started again. The 08, 09 period of time definitely affected home builders. I'm sure it affected real estate investors that were in that arena at the time, just because the conditions of what happened last time were different than what we're going through now with the COVID. At some point, I just started working purely off referral, and that's how I kept broadening the states and the territory that I was in. And in 2017, I was introduced to TAB, the absolute best, which was Anthony Moore, Bob McIntosh, and Terry Thayer. These three guys created something called TAB, which was, at the time, it was a mastermind for real estate investors. It was something that they just said, hey, Mike, October 2017, we're going to go to Cancun. We're going to bring some investors from around the country. We would like for you to be a speaker at this event. We're not really sure how many people will come. Just come down there and share your knowledge. And we had about 55 real estate investors come to that seminar or the mastermind. And it was very laid back, very informal. Everybody did their own thing during the day, and then from dinner until about 10, we all got together. And it's a funny story because the first night, Bob spoke on social media, and unfortunately, I can't remember a whole lot he talked about that night. Someone decided to break out the fireball and a few other things, and things got pretty exciting and pretty very laid back. And I'm serious, by 10 o'clock that night, I think all 50 of us were feeling pretty good. So, but it was a good way to kick off the event. And to give you the other side, I was the speaker on Thursday night, and by that time, people had kind of had their fill. They'd already had enough of the talking, so my event was very low key, so to speak. But the good news is, once I got back home, I would say 40, 47, 48 of the group came on as clients. And because it was one of those deals where you guys have about 100 different things to think of when you're going through a rehab or a flip or if you're wholesaling in a double close, it's just quick, bang, bang. But when you're doing a full-on flip that takes 6 months, there's a lot that you have coming at you. Unfortunately, there's certain areas that fall not necessarily to the bottom of the list, but it's out of sight, out of mind. And as JJ was saying at the beginning, as far as doing due diligence, one thing that I always try and talk about in the beginning is I call them advocates, or I call it your trusted advisors. and I recommend everybody have a real estate attorney, in other words, an attorney that understands real estate. I recommend a CPA that understands real estate and land, not just a garden variety CPA. You want to have a good realtor. You want to have a good general contractor or contractors that are working for you. They, as much as anybody else, can make or break you. And then number 5, I do put on that list having a good insurance advisor, because unfortunately, what I find 95% of the time, and I'm just throwing out a percentage, it might even be 99% of the time, but over 9 out of 10 policies that I look at when I'm reviewing these for clients, or even, you know, in meetings like this, I see the same thing over and over again. And the coverage just isn't written very well, number 1. Coverage can be very expensive. And it's just kind of like you make a couple phone calls. I promise you, if you call 5 insurance agents, you'll get 7 different answers about how to insure the product. They do the best they can with the knowledge that they have. And it's simply because I've become an expert in the area. This is all I do, home builders, real estate investors. Since 2017, I believe, so out of 375 clients now, 225 are real estate investors. So I went from 0 to 225 in just 3 years. And it's simply because I took the time to go in and research what would be required for real estate investors. And as it turned out, it's very similar to what home builders need. And that's how I was able to go to my carriers. And I have developed special programs. I know you hear people say this all the time, but I've got relationships with a couple carriers that are in all 50 states that I don't want to call it exclusive, but I have a program that I put together by sitting down with the underwriters at those carriers that made it specific to what I wanted to do. And one of the carriers that I do use is Great American. And I'm probably their 3rd or 4th largest agent for writing builder's risk. And I am the only one in the country that can write real estate investors on a blanket policy. And I'll get into a little bit what that is later. But I'm the only one in the country that has access to that. And then I have a carrier that does my general liability, that I was the first with that carrier to develop a program just for you guys. So that's just a little bit about where I'm coming from, what I offer. I'll give one quick example. I was invited into the April meeting, I believe, that JJ had to be one of the sub speakers in a breakout room. And Indar Lang, our good friend from Hawaii, was in on that meeting, and he called me a couple days later and said, "Mike, let's start talking about my program." And I know he won't mind me sharing some details about the situation, because his situation is very common, even for the larger. So Indar, without COVID, probably doing 50 properties a year. He won't quite hit that number this year. But what I learned is for every project he was doing, he was getting a separate policy. So now you have someone getting 50 policies a year. I don't know how he was doing it, honestly. That would drive me nuts. So he's getting 50 policies a year. Plus, if the carrier or the lender, or not the carrier, if the lender or the owner required flood coverage, he was having to go out and get a separate flood policy. He didn't have to have it on every property, but on, let's just say, half. So he's got 75 policies sitting out there, plus a general liability policy for each of these properties. So we're talking over 100 insurance policies. And again, I don't know how he did it. So I responded back to Indar, and I said, "Indar, how would you like to have one policy that would cover all your projects that you're doing, all of them? For flood, we can include the flood. It's an extra charge, but we don't have to go out and write you a separate policy. So I'll take you from over 100 policies down to 2. And it was interesting. It took almost 2 months to get him to come aboard, because at first he's like, "Nah, it's too good to be true. There's no way you can do this. There's just no way." I said, "Trust me. Let's go through the numbers and look at it." Indar was getting a property policy, which is what 90% of you guys are getting. And a property policy is not what you want to cover a flip, especially one that's going to go for 3, 4, 5, or 6 months. There is a better way to cover those projects, and property is not the way to go. My biggest, I don't want to call them competition because I'm 99% success rate against them, but there is an insurance program available that Fortune Builders promotes, and it's got letters in the name. I don't want to name it by name, but most of us are familiar with them. They have a monthly reporting option. They do the same thing. They put you guys on property forms, and unfortunately, it's just not the way to go with it. Number two, they will run the address of the property and determine whether or not they'll give you coverage or if they'll give you the proper coverage that you need. So I have seen clients that have 30 projects going at one time and literally have 20 different kinds of coverages built into that policy that they have. And again, I don't know how they do it. It would drive me crazy. I prefer something that's simple, consistent, and is going to be the same across the board. So it took me almost 60 days to get Indor on board. In the end, one policy versus over 100. We do have to write some separate general liability policies for him depending on what he's doing. And I would say my rate, on top of just making it easier, I just can't put a price on the time that we're saving them. And that's, time is money. For me, that is my most valuable that's what I value most, is my time. But long story short, I probably cut his costs by 40 to 45%. So again, I know it sounds too good to be true. You're going to save a ton of money. You're going to get a better program, better coverage. You will get better customer service because my account managers, this is all they do. So this is all they do. It's all I do. And it's what we know very well. And I just used Indar as an example because it's the same every single time. So with that said, there really are 3 areas that you have to look at with the insurance for real estate investing. The 2 primary areas is, number 1, I write what's called a builder's risk policy. A builder's risk policy is an inland marine form, and all that means to you guys is a simplified, uncontrolled form that a carrier can come in and just determine how they want to write the coverage. It is literally like an a la carte. I can sit down with the carrier and say, I want this, 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 and this. When you write something on a property form, property is a filed form with each state, and there are certain restrictions and regulations and endorsements, and the coverage has been written a certain way. In other words, it's a box program. Here it is. There's not many changes you can do with it. The biggest issue you're going to have with the property form is, guess what? Vacancy. Well, vacancy is the number 1 thing you guys are facing when you're picking up a property, because it's vacant the whole time. From the time you get it until the time you get it back off the market, it's vacant. So property forms starts the clock ticking on vacancy. And usually after 30 days, you lose coverage. It's typically the theft coverage. After 60 days, you'll lose some of the fire coverage. And then after 90 days, the coverage is void altogether. So if you get a property form, it's usually not written correctly, and you've got some coverage issues from the day you write it. Number 2, it's very restrictive on coverage, and a lot of the carriers will not give you theft. I've been doing this for 10 years now, and 75% of my home builder and real estate investor claims are theft and vandalism. That's it. That's 75% of the claims. So you get a carrier that's going to write you a policy that's very restrictive and not cover the most likely thing to happen to you. And then they're charging you double what we charge to not get a whole lot. So the whole thing sounds kind of out of balance, and it really is. And again, I'm not knocking the competition or knocking other agents. They just don't know what they don't know, and they don't know how to go and get something that I've been able to go get. And it was because of my experience with home builders that allowed me to design these programs. And I'm not saying I'm the first to come up with the idea, but it was kind of one of those, voila moments of like, well, why can't I just do these like home builders? They're doing the same thing. And in fact, nationwide, the numbers show that a new construction house right now, because of weather and other conditions, it's taking about 7 months to build. The average real estate flip from the time you take title to it to the time you sell it or put a tenant in it or hold on, whatever it is 5 months. So in a way, the flips are moving along quicker than the new home builds right now as it stands. I'm just giving you national averages. Some areas it's quicker, some areas it's longer. So having said that, that's why I was able to go to my carriers and convince them that we didn't have a bigger exposure that most of the carriers think they have. Trust me, when they hear, oh, I'm taking on a vacant property and it's on this side of town or whatever, like, oh, we don't want anything to do with it because we have all these risks with it. You know, you're always going to have a theft and vandalism risk, and it's the same with new home builders. You can be in a gated community and still have a 10-year-old kid come through and turn the water on and do $40,000 worth of damage. So I've been able to prove over the 3 years to my carriers that the loss ratio with the real estate investors has actually performed about 5% better than my home builder business. So it's a very good area for the insurers. We charge a good, there's a good premium charge for it. We don't give it away, but it's still a lot less than what the competition does. So builder's risk is the number one thing you want. You want builder's risk instead of a property form. Now, if you have 5 or less projects, 5 or fewer projects, you will do what's called a single shot policy. You will write it for the duration of that one project. Once that project is done, it goes away. If you start writing, if you start doing more than 5 projects, we do what's called a blanket policy. And for Endar and other clients, that's what he has. He has a blanket policy. He does not have to call me every time he gets a new property. Coverage is automatic for the 12 months. You go build as much as you want, renovate, remodel, build a new house, and we come back at the end of the 12 months and do an audit. And the audit is very simple. It's an Excel spreadsheet. I would just say, guys, how many properties did you do during the year? And there are different levels of construction, and we blend the rate. I won't get into all that right now. We will do what's called a lipstick flip. So if you just get a property and do $5,000 or $10,000 worth of work, just paint it, put some carpet in it, whatever, and you have it sold in 45 days, we call that a lipstick flip. If you've got a full home project that's going to take you 5 to 6 months, that's a regular renovation. And then third, if you just decide to build something from ground up, brand new construction. Brand new construction carries the lowest rate, the lipstick flips in the middle, and then the full-on renovation has a third rate. So it's one policy that covers all your projects during the year. The only time I hear from you guys is when the lender gets involved. So when the lender says, hey, we need a certificate of insurance or evidence of insurance, so I still hear from my clients regularly when it comes to that. But as far as the insurance policy itself, it's a blanket policy with master limits in place, and it's good for the entire 12 months. So again, right there, we just took it from something that could be complicated to very easy. The rates are automatically adjusted at the end, but I'll go ahead and tell you what my rate is for a typical flip. It's 30 cents. So if you have a $200,000 house that you're going to do $100,000 of renovations on, that's $300,000 of total coverage you need. My rate's 30 cents. It doesn't matter if it takes you 2 months to get it done or 11 months. I will cover it for 12 months. And right now there are some delays that hit due to lending requirements and things like that. And again, no matter what the intentions are, the average is 5 months to get in and out of a project. So that's $900. That's it. That covers that $300,000 project with the $2,500 deductible. It's under a builder's risk form. We do cover theft. I do cover earthquake and flood. And we don't try, you don't have to keep up with me on these coverages. We build in what's called soft costs. So we have some cost overrun coverage. At the end of the day, it's the most comprehensive form that you'll be able to find in the marketplace for what you guys are doing. 90% of what's written, real estate investors get a property form that either excludes theft or has a high deductible. And then when it comes to wind coverage, if you're somewhere along the coast, they're going to try and throw a high percentage deductible for what's called windstorm or a named storm peril. And I'm not trying to get too complicated, but that's builder's risk. That will cover the existing structure when you get it, plus whatever renovations you're putting into it. Now, again, coverage is automatic. So let's say you buy it for $200,000 and then you put in $100,000 and then you get towards the end and say, well, we're going to do another 40 or 50,000 of remodeling or additions, that'll be covered, because at the end of the 12 months, you're going to come to me and give me those final values, and that's how we're going to audit it. So the question is, how do you determine what you're paying up front to balance against the audit? And that's where we just estimate. So if I'm talking to an individual, I'm going to say, Mike, we're going to do 6 homes this year. The average acquisition is 200. The average renovation is 100. That's 300 times 6. That's 1.8 million in completed values. We write the policy based on that at a 30-cent rate. So 1.8 times 3, that gives you what, about $5,400. That's a deposit premium. You get monthly installments. You do not have to pay that all up front. We get to the end of the 12 months, you send me an Excel spreadsheet, and we say, okay, what did you do during the year? You come back and say, Mike, we did 4 projects at 1.5 million. I'm going to give you a refund back on that 300,000 that you fell below. If you come back to me and say we knocked it out of the park and did 15 projects this year, then we'll just add up the difference and you pay us the premium difference. It is that simple. It really is very simple. That's builder's risk. The other aspect that you have to look at is what's called general liability. Now, I will say this, for my real estate investors, for every real estate investor that I write a builder's risk policy for, only 1 out of 10 gets a general liability policy, and I don't understand why. Because general liability is the liability involved with your contractors and your subs that go in and do the work. There's 2 parts to general liability: products and completed operations. Products is what that is. Products is the materials being used in your project. So the completed operations is the work being done by the sub. So the easiest way to explain it is, say you have a plumber coming in doing the work. The product is the actual pipe that he's putting in. The completed operations is him installing that pipe. Those are the 2 things you have to watch out for when you are getting a general contractor or a sub to go in and do work for you. The good news is, for real estate investors, you are not subject to what's called the statute of repose. The statute of repose for construction defects only applies for new construction. And I'll give you an example. In the state of South Carolina, if you build a house from the ground up, you're on the hook for 8 years. 8 years. So if you build it in 2020, you are not off the hook until 2028 for construction defects. And that's why construction defect claims are the tens of billions of dollars right now, and is where attorneys really like to attack, because they know it's a cash cow for them. And they attack it in 2 areas. It's whether it's the product was faulty or if it was the workmanship was faulty. I can tell you guys right now, the carrier that I take most of the policies away from, they exclude products and completed operations. So they may only charge you $20 a month for liability, but they are not giving you any of that coverage. All you're getting from them is a premises liability. If Susie and Johnny go through your job site and decide to break in the house and one of them gets hurt and their parents come and sue you, you do have coverage for that, but you have 0 coverage for what the subcontractors are doing, period. They don't even owe you a defense. You'll get a letter immediately from the company, the insurance carrier, that says, that's it, you're SOL, you're on your own, go hire your own attorney. You got to now chase down the sub. You got to go after him to make sure he's got the proper coverage, and on and on and on. And again, to simplify this, I've got 12 reasons why you do not want to rely on your general contractor or your subs for coverage. I'll give you a couple of them, won't go through all 12. Number 1, the big one, is they don't always have coverage at the time of the claim. They may send you a certificate saying they have coverage when they start the job, but in 30 days, if they haven't paid their premium, their carrier will cancel them, and guess what? There's no obligation for that agent to notify you that they no longer have coverage. So you may be 4 months after you sold the house, the homeowner that has the house now says, well, I've got a plumbing issue. They will sue who sold them the house, which is you, the real estate investor, because they have no idea who did the plumbing, only you did. You will get sued. If you do not have the proper coverage, you'll have to answer to it, and you will incur a lot of legal expense and headaches trying to chase down the subcontractor to make them responsible for, because they did the damage, they did the work, they should be held responsible. If they don't have a policy in place at the time the claim comes about, there's nothing there. there's nothing to go after. Number two, here's another big one. They may not even have the coverage for the work they're doing for you. And I'll give you a perfect example. So if you have a general contractor or a sub that comes in and do some roofing work for you, there's a good chance they don't have coverage for roofing. So they're doing work on your behalf and don't even have the coverage. And how would you know that? They'll send you a certificate of insurance. They'll send you that piece of paper that says, hey, I've got general liability coverage. It's this, this, and this. And Anthony Moore, one of my comments, he likes to call them a ninja tip. So here's a ninja tip for you guys. If you use a general contractor, they may or may not have coverage for roofing, but if you have a specific roofing guy come out to do your roof work, the ninja tip is this. More often than not, he better have roofing in the name of his company. If it is ABC Roofing Company, odds are he's got the proper coverage. If it is Mike Stelljes Handyman, I can tell you right now, he's paid $500 for a general liability policy. And if you flip about 40 pages into his policy, you'll see in big, broad, excluding roofing work. So he doesn't even have coverage for the work he's doing for you. And how on earth would you know that otherwise? Because you're just getting a piece of paper and just taking them at their word. So, and again, I can get into some other, one thing that's happening right now, and I don't know for you guys, COVID has affected me only from a standpoint of being able to be face-to-face. As JJ and I have talked about, I prefer to be out in front of the microphone with him. I prefer to be at these real estate investor meetings. I'm in groups all over the country. COVID this year has curtailed my ability to get in front of people because I feel like I'm better in front of people than Zoom is great, but I still like to be there, you know, one-on-one, face-to-face. So it's curtailed my ability to go out and speak, but as far as my business, my home builders are having record years. Most of my real estate investors are just knocking it out of the park. So it hasn't really slowed it down. Having said that, that leads into my next point. There are a lot of subcontractors that sub their work. So you sign a contract with ABC Plumbing to do your plumbing work, and if you're not at the job site the day the plumbing's done, it might be XYZ Plumbing that shows up. Again, you'll never know this because ABC says, look, I've got a big job over here. I can't get there. I'm going to send my buddy XYZ to go do the work. He goes in, does the work, leaves. Everything is great until you have a claim. And then that's when you go in and find out that ABC didn't actually do the plumbing. So general liability, you need to have proper coverage for the work that's actually being done. Again, only 1 out of 10 of my real estate investor clients get the general liability policy. I don't know why, because a general liability claim can do just as much damage or more than a builder's risk claim. And I'll invite you guys. I actually have a website. It's easy. It's www.mikestelljes.com. And I actually do commercials. One of my clients that lives in Chicago, I go out there and shoot some funny commercials. And if you scroll down on my website and check one out, it's a funny one. We try and make it funny, but it was an actual claim that happened to my client. And here's the biggest reason why you want to have your own policy. Sometimes you cannot determine the at-fault party. Sometimes everybody has insurance except you, and we can't pin it on anybody. So one of my commercials I do was a real claim that happened to one of my clients. It was a $1.5 million house. 60 days after it was sold, the husband was in the shower, the wife was in the kitchen, and the pipe backed up and sewage got on her face and all over the guy in the shower. They come down, this is crazy, we need someone to come out. They called my builder, said we got to get somebody out there. We got a plumber out there within 30 minutes, shut the valve off. And bottom line, here's what happened. The pipe that was laid in under the driveway that was leading into the house had cracked at some point during the construction process. And when it was cracked, the concrete guy that came in and laid the concrete, it got filled up with concrete. So this was just a ticking time bomb. This was going to happen. And it took 60 days for it to eventually back up and come back out. So this was a Charlotte, North Carolina client. We went to the city of Charlotte. Did you lay bad piping? No, we didn't. You know, the city's never going to take responsibility. You next go to the plumbing contractor. Did the plumbing contractor put in bad pipe? No. He said the pipe was perfectly fine. Is the concrete guy going to say he did anything wrong? No, he just, all he did was put the concrete, filled up the pipe. Then we think most likely it was the grading contractor when he was on site running around before everything went vertical. He probably ran over the pipe and crushed it, and then the whole thing started. But again, we can't prove he did it because it could have been a number of people. We think it was the grading contractor. So in this particular case, guys, we had 4 parties that we could go to and say, can we hold them responsible? And the answer was no. So guess who had to pay the claim? My client. And this was a $30,000 claim, partly because the homeowner decided to call one of those emergency restoration companies, and they decided to take out the insulation under the entire house instead of just the one area. That was $15,000 for them to get, because they knew that they were going to be paid, right? Whether it was their State Farm, homeowner's insurance policy, or my policy, they just went in and tore up under the house because they knew they were going to get paid. They didn't care how much work they did or didn't do. Probably could have been done for $4,000. They submitted it. Fortunately, my client had the proper coverage. We submitted it to our carrier. It was a $30,000 claim that we got down to about $22,000 because my carrier went after the emergency restoration company and said, look, y'all just did too much work. It was out of the scope. Long story short, what I'm explaining to you guys is even if you have a general contractor or a sub that has decent coverage, sometimes you can still be left responsible. So that $22,000 my client had to pay out is no different than having your house vandalized, your HVAC system stolen for $8,000 or $9,000. And again, when you're working on flips, you know, $22,000, $25,000, $30,000, that could take the profit out of a project, and now you're on the losing end. So I'm just trying to really, you know, hammer home the fact that builder's risk is important to cover the structure and renovations itself, but general liability is equally important. Now, builder's risk, I'm going to be 30 to 40% less than anything you've got out there cost-wise. General liability, I'm going to be double or triple. Why? Because I'm not giving it to you for $30 a month, because I'm actually giving you real coverage. So what ends up happening on my larger real estate investors is it's a wash. Typically the coverage is not the coverage, the premiums. I'm going to be that much lower on the builder's risk. I'm going to be higher on the GL, but most of my clients come out even or ahead because I am low on the builder's risk by so much. But again, for them, it's a no-brainer because like, well, heck, if I'm going to pay $25,000 for insurance, I might as well get something for it. So they see the value in what they're going to get out of it. And I know I'm getting a little, so it's general liability and builder's risk. I don't even want to talk about workers' comp. That'll be individual because 1 out of 100, I've probably only got 5 of my real estate investors that carry workers' comp. And that's a whole separate discussion. But at the end of the day, if your sub isn't carrying workers' comp, you will be held responsible if something happens to one of their employees on your job site. So it's, I just don't talk about it as much because it's in order: builder's risk, GL, workers' comp. Very few of my guys carry workers' comp. Some carry the GL. Almost, obviously, all of them carry at least a 1. So those are kind of the 3 areas. And I know I've covered a lot. And at this point, JJ, I just want to, you know, I don't want people to go to sleep yet. I mean, because again, as you can see, it's a very important, here, and I joke about it, but it's something that gets overlooked. And time after time after time, I've had the client say, I've had this claim denied, or I lost my butt on this project because I didn't have the proper coverage, and insurance just all the same. It all sucks. They don't cover anything. And it's a reputation that's kind of been well earned. But it's not that the agents are necessarily doing a bad thing. It's not that the carriers are doing anything. It's the agent's responsibility to inform you guys what you are or aren't getting. And that's where the disconnect is. The agent doesn't understand the programs well enough to even be able to tell their clients what they are or aren't getting. And I'll kind of end it on this. I'll give you another example of why a property policy is so dangerous. I had a client call me. I've got a group that I work well with up in Minneapolis. So I've got probably 10 or 12 clients in the Minneapolis, St. Paul area, some a little further out. So I had one call me. I spoke at their meeting last October. Let's say in December, I had one of them call me and said, hey, Mike, heard you speak. It was nice. I got a project for you. She said, it's about a $500,000 project. It's about a $350,000 house. We're going to do about $150,000 in renovations. I need about $500,000 of coverage. I've already written a policy, but it's only been in place for a couple of weeks. Can you take a look at it? So I said, sure. She sent it to me. And this is typical, guys. I'm not making this up. She had a policy with Farmers. Farmers Insurance is a really good carrier. They provide good coverage. But here was the problem with her property policy. Right there on the declaration page, she only had $350,000 of coverage. So and when I say $350 for the house, I'm not talking about land. It was truly $350 for the house plus $150 for the renovations. Her policy was written for $350,000. So it was already underinsured by $150,000. Number two, a property policy has what's called co-insurance. And co-insurance means if you're not insured to value, they will penalize you. And if it's an 80% co-insurance, you must be insured within 80% of the value or they will pop you in a claim situation. She was underinsured by about 35%. So if she had had a claim, it would have been reduced because she didn't have as much as she needed. Number three, flip back in the pages and I looked at it. It said, number one, this coverage will not apply unless this is your primary or secondary house. Well, it wasn't her primary house and it wasn't a secondary house. This is a real estate investment and it was a flip. And then the next exclusion was, well, if you're doing any renovations on this house, it's vacant, we're not covered. So she had bought a policy for about $1,800 that was underinsured, was going to penalize her if it was going to cover, but there were two exclusions right there in black and white that was not going to cover. So that policy was worthless, literally worthless. So that's what I deal with all the time. So I basically went back in and said, okay, $500,000, 30-cent rate, $1,500, you're good for a year. We cover those things. And the last thing I want to say real quick, under the builder's risk, this is where I really helped Endar. This is a point I don't want to forget. The banks are going to make us give them a value to satisfy them. We do not insure land. We do not insure land. We don't cover land. There's no way to cover it, right? So I'm not going to charge you guys for it. So if up front, the bank or the lender makes you get a $300,000 loan to cover the house plus the land when the house is only worth about $200,000, and you do the renovations, I'll give them a policy that says $300,000 for the loan plus whatever you need for the renovations, but we don't insure land. So while up front, we may be sending out a certificate of insurance to satisfy the lender's needs, when we get to the end of the year and do the audit, when you're giving me the values, you're giving me the value of the house. It's just by itself, not the land, plus the renovations. And this is where it's shocked. Again, I like using Endar as an example because I said, Endar, land has got to be expensive out there. He goes, oh my gosh, it's crazy. He sent me an email with the project that he had. It was $1.8 million. The agent had written him a $1.8 million property policy. Imagine the premium he was paying on it. Guess how much the house was tax valued at? $320,000. The land was $1.5 million, and the agent was charging him on a $1.8 million policy. So when I went to him and said, hey, how would you like to pay a 30-cent rate on $320,000? $900, right? Versus paying on 1.8. And again, I'll take care of the banks for you. And here's one advantage too that I have over any of my competition. Because I'm in 42 states, I'm not Mike Stelljes dealing with Bank of America in Charlotte, North Carolina. I am used to dealing with banks all over the country. And I will tell you guys right now, the banks are the biggest pains in the asses. They are ridiculous. I mean, even for us. I mean, it is, I'm telling you, I battle them every day. We win the battles 99.9% of the time. I will tell you guys this right now. Mark, this isn't a ninja tip. This will happen. If I write your account and we write you on a blanket policy, one of the banks you may be dealing with won't even know what that is. They're going to say, I want a policy that's paid premium up front, and I want to see the address and blah, blah, blah on there. It's like, oh my God. So you try and explain what a blanket policy is, and we'll educate them, I promise you. That cannot be the reason why you can't. My largest client builds 1,800 homes a year. Could you imagine them having to get a separate policy for every project? It's impossible. So I write them on a blanket policy. There's no reason why you guys can't have a blanket policy as well. So I will fight the banks every day, and it happens all the freaking time. They'll be like, well, we need, and I say, well, it's a blanket policy. It's going to give you 1.5 million in coverage for any project they're doing with a $5 million aggregate. That's more than enough to cover any single project. Our evidence of insurance will show the address, but the policy itself is a blanket policy covering all projects. So the blanket policy will not list every single address. I'll handle that for you, but I can tell you, mark it down. If we work together, that will be something that gets brought up. Another thing that they bring up is this paid receipt crap. I don't know. I guess it's a closing document that they need. They want to see that you paid $900 for that $300,000 project, and we do not give receipts. We do not give invoices, because if you're on a blanket policy, you're paying me a monthly premium, right? So if it's a $5,000 premium, you're paying me $500 a month. All I can do is tell the lender that you are paid up to date and your coverage is current. If they absolutely want to require some kind of paid invoice, here's what I tell my clients. You yourself can write up a dummy invoice and say, my builder's risk for this project's $900, and give it to the bank. I mean, that's what we do, because they will not get one from us. Legally, we can't. The Department of Insurance will not allow me to say, you paid me $900 premium for this property, when your monthly premium is only $500. So I'll tell you right now, those are the battles we'll have with the banks, but that's what I'm saying. Our guys are used to it. We do it all the time. We do it every day, and I deal with lenders all over the country. The only thing we ask for is don't call me at 3 o'clock on a Friday afternoon saying you have a closing at 5 o'clock. While your policy may be in effect, you've got the coverage, but we may not be able to get the documents over to the bank all, by in time, or the closing attorney. And here's the other thing. Just be patient with us in the beginning, because I can assure you there are times where we have to go up the ladder to about the fourth person above the lender that we're dealing with and do these evidence of insurances 3 or 4 times, because those idiots at the banks don't understand what half the time they don't even understand what they're asking for. So we have to redo and redo. What I'm getting at there is, we get our certificates turned around within 24 hours. If you call me that morning and you have a 5 o'clock p.m. closing, we will get you what you need. 99.9% of the time, the holdups that we have to get your closings done is the banks. Plain and simple. So that's kind of it in a nutshell, guys. I know I've kind of gone on a little bit. We've got a couple different coverages to talk about. And again, I'm impressed that you guys are on this Zoom call on a Saturday evening listening to someone talk about insurance. That alone is a kudos. So tip one to yourselves.